in partnership with CommSec.
Okay, let's go to Tom Piotrowski now, just picking up some reporting that Donald Trump might be about to wind back tariffs on auto parts, that and a few claims on pharma as well. So a bit in the tariff space today. What sort of an impact will that have, Tom?
Pete, well, you're well informed. That has been a theme of the session as far as Northern Hemisphere markets have been concerned. A newfound pragmatism, I suppose, on the part of the Trump administration in terms of winding back some of the reciprocal tariffs. We spoke about this yesterday morning, most notably when it came to consumer electronics. That's what marked the theme in regional trade yesterday and was reflected in European trade last night. We saw a pretty exultant mood for European stocks. They were up quite smartly in the order of about a percent in the case of, or 2.1% in the case of the UK market, the French market up 2.4%, and the German market up 2.8%. That fed into the start of US trade as well, Pete, and as you highlight, the potential for tariffs being exempted on auto parts was a factor pushing US car makers higher. So we saw Ford, General Motors, they were up in the order of around 4%. Tesla less so, up by around 0.4%. So that all translated to a pretty positive tone generally for Wall Street. Even though they gave back some of their gains towards the end of the session, you had the leading indices up in the order of 2/3 to 0.75%. At one stage, they were up by around close to 2%. But it's important to note that there was a significant moderation in long-term interest rates overnight. So this is significant from last week's perspective of long-term interest rates having risen by about 0.5%. So last night you had a 10-year government bond down by about 10 basis points. That's a sizable move, but to see the calm restored to the markets, I suppose, in relative terms, because with the interest rates moving as high as they did, with the US dollar flailing around the way it has been, that created concerns about the fact that investors might be escaping US dollar assets, the greenback and US treasuries in particular, which would be a bad outcome. And that gave rise to the conversation about what the Fed would do. The Fed has said in recent days that they'd be ready to intervene, so that'll help get things back on an even keel. We'll be up by a little less than 0.2% when trade gets underway later on this morning.
All right, Tom. Good to see you, by the way. We'll see you in a few hours' time.